Okay, so welcome to our commentary on the True Potential portfolios. So before we start, I'd like to wish you all a happy and prosperous new year for 2017. So what's the format for today? I'm going to discuss the performance of the portfolios, what changes have been made, and also look to see what are the key themes that we're seeing from our fund manager partners. As an aside to this though, I'd like to say that the True Potential portfolios now have over £1.7 billion invested since we launched on October 2015. I'd like to take this opportunity to thank you for your continued support. For me personally, I've worked for both asset managers, I've worked for an investment bank, and I've never seen this level of assets come into a product so quickly. Okay, so let's move on. Let's now look at performance. Starting off with December, you can see the portfolios have posted some good, solid, positive numbers, with post-Trump election optimism helping to drive returns. Looking back to performance since launch, we're very pleased with how the portfolios have performed, with returns varying from 9% for defensive, right the way up to nearly 25% for aggressive. You can see that investors who've been willing to take on more risk have been rewarded. Okay, so as you'll know, we speak to our fund manager partners at least monthly, looking for any short-term key themes, and then we can tilt the portfolios to take advantage of these themes. One theme that we're seeing is that many of our managers are seeing value within Europe, feeling that we could see some solid growth coming from this area. Europe has underperformed other developed markets over 2016, with many investors nervous of political risk. However, sentiment is changing, and some of our managers feel that there could be significant growth from here. The next theme that I'm going to discuss is the US dollar. So this is very much in focus as our manager partners look to understand whether current levels of high strength will continue and exactly how will that affect other asset classes. Emerging markets are one of the main discussion points as managers look to see whether a strong US dollar will cause problems for this area. Okay, so let's take a look back at what's been happening over the months. So what happened during the rebalance in December? So we made changes within two of our portfolios, and they are balanced and balanced plus. Okay, so let's start off with balanced. And what we've done here is we've reduced the position in the True Potential Allianz Balanced Fund. So it's got the highest risk measure within our balanced fund range. And the fund is more momentum driven without any significant exposure towards value. And this is a style that we're currently favouring right now. We correspondingly increased the holding in the True Potential 7IM Balanced Fund to benefit from a series of defensive-based strategies they have implemented in order to mitigate risk at a time when market volatility is low, but vulnerable to risks on the horizon. As well as that, the 7IM fund also has a skew in favour of value. For the Balanced Plus portfolio, the True Potential SCI Cautious Fund has been reduced due to their exposure to minimum volatility equities. So this is an area of the market that has seen huge inflows this year. The strategy has worked well as a bond proxy strategy, but with bond yields rising, the strategy is now facing headwinds. Last month, as you might remember, we introduced the True Potential Schroder Cautious Fund to provide increased fund manager style diversification. As this fund has a low bond exposure with a larger weighting in cash and a value orientation, so a style orientation towards value across equities, we increase the position. Looking at the rest of the True Potential portfolio range, allocations have been kept the same, with the optimization of all four factors continuing to be paramount within the portfolios.